Looking at what's happening in terms of the FX space, some very interesting moves, in particular the euro dollar. That's going to have a big knock-on effect in terms of the dollar index. And the dollar index, the majority of that is euro dollar, but nonetheless, really that's pointing towards a potential resurgence in terms of the dollar. We're starting off by looking at what's happening in terms of euro dollar. This is the daily time frame. You can see here that it is really starting to turn lower in a heavy way. Now you can see essentially we have always seen relatively decent pullbacks within this uptrend that we've been seeing in recent months, and therefore it did seem likely that we were going to see some sort of pullback. But as I always say, wait for the break and then play it from there. You can see that essentially we kept coming back down towards this same level. I've got two there. Around about 11334. Now this level continued to hold one time, 2, 3, 4, and then we've finally seen the break today. I want to see a hourly close below that level to really indicate that actually it's cleared out this period of consolidation, and this is actually a top before we sell off once more. 11310 would be your next support level. You can see that's already playing in to the pullback that we're seeing at the moment. Now bear in mind that we are still seeing, I'll bring it back down to the daily time frame, we are still seeing an uptrend coming in play, and therefore that would point towards this being a pullback and a retracement as opposed to a top of this whole wider move. You can see that yes, the longer term is a big downtrend, but since then we've largely been seeing sort of long-term rallies, very gradual rallies, turns lower, and then we're seeing something similar now. You can see that 114.95 was a very crucial level that previously did top off a number of those rallies. So there is a potential that this could mark the top, but I would need to see a close back below, and this is somewhere away at the moment, 111.44 for me to actually think, okay, this rally is completely over. And until that happens, I'll be looking for a pullback of this retracement to be getting long, and therefore I'll be looking, as I generally do, more towards the 76.4 pullback. On this occasion it's 112.20. That still leaves significant room for downside. So for the short term, I do think we're likely to see further downside if we get that hourly close below that sort of neckline of the topping pattern. But I'll be looking towards a drop back down towards 11220, and if we did get a move back down towards there, I'd be hoping to get long with my stops just below previous swing low here, 111.44, for a move back towards 114.65. But also bear in mind we do have that level 114.95 that, again, as I showed you previously, has been really crucial for euro dollar over recent months. This is the dollar index, and the dollar index, if I zoom out here, you can see the crucial thing here is that basically we always seem to come back to this same kind of area before rallying very heavily. We've seen it for the last year odd, and quite frankly we're coming back to that level, and there's no reason to believe that we're not going to see something similar. Therefore, as you can see, the bottoms don't necessarily always line up. You can see here 93.40, 93.17, below there 92.72. So it doesn't necessarily mean it's going to exactly touch it. It means once we get within relatively close proximity to this, I'll be trying to look for potential bullish reversal signals. Of course, the daily time frame, you can see we're getting a nice tick towards the upside. On the hourly time frame, what we can see is we're starting to actually now create higher highs, higher lows coming into play. So actually I'm starting to become a little bit more bullish for the US dollar. You can see essentially we are seeing some sort of head and shoulders pattern here with the neckline around about 94.40, and essentially I'll be bullish US dollar unless we get a break back below 93.97. So there's a potential that this could mark the bottom for the US dollar basket. Essentially, it's all about how far this is going to extend. Your next resistance point, 94.74, 95.10, of course, as these resistance points get taken out, it gives you more confidence that actually it is a bottom and not necessarily just a retracement before another leg lower. But we're coming into a massive zone of support in terms of longer term time frames, so I wouldn't be surprised to see this really start to turn around. So this is the dollar yen. We'll take it back out to the daily time frame to give you a wider picture. Essentially, we saw this big deterioration at the turn of the year. We saw it's essentially really consolidating since then, and then we finally saw a break below 110.66. Now that was a very bearish indicator. We sold off very heavily from there. 107 was the projection of the head and shoulders formation that we saw at the back end of last year. So I was hoping for 107. I still think that we're likely to reach it, but for the time being we're seeing it retrace higher. And for me, that's not necessarily a bad thing. We're going to be looking towards 109.94 and 110.66. That level in particular, if we did see it reach 110.66, then that'll be a massive level of previous support, likely to turn into resistance. And I'd certainly be looking for reversal, bearish reversal patterns around about that level. Again, we'll look in terms of the hourly time frame. What we can see here is that we've managed to clear out this 109.10. 109.10 creates that double bottom formation, and the projected target from that double bottom pretty much takes us back towards that 110.66. So there is certainly room for further upside for the time being. We can see here that we're gradually creating higher highs, higher lows. So as long as we don't break below 108.44, then it looks like we're likely to trend towards the upside. Of course, this has big correlations in terms of what we're seeing in terms of the commodity space, the likes of oil, gold, and also what's happening in terms of the indices, because of the fact that people really see the yen as a safe haven. So when we're seeing sell-off in terms of the risk assets, then you're seeing people pile into the yen, and vice versa. As we're seeing the FTSE, the DAX, the Dow, oil all starting to rally, you're likely to see weakness in terms of yen, and that's exactly what we're seeing at the moment.